Hello, everyone, and thank you for joining us today in our webinar about the cryptocurrencies. This is Mohanad Yakout, the Global Head of Market Research at ONEPRO, and I have today with me Shamendra Sen, our Business Development Manager and the crypto markets expert. How are you, Shamendra?
Hey, Yakout, I'm doing well. How about you?
That's really good. I'm excited today for today's webinar. So basically today is the third webinar out of our series during the holy month of Ramadan. So we discussed various markets. We talked about the gold markets for the first session. And for the second session, we went through the oil markets and how to trade the oil markets. Today, we're going to go through in depth about the cryptocurrencies markets and how to trade those markets, both basically on the fundamental side, what does even the cryptocurrency mean? And by the end, we will conduct a very brief, however, a detailed technical analysis session on the main currencies, on the cryptocurrencies. I mean, the Bitcoin, Ethereum, Litecoin. And of course, we will be having a look on all of your questions to answer them on the spot. Let me just announce something really quick for all of our attendees today. By the end of the session today, we will be having a spin and win. So we will be giving away 15 accounts from ONEPRO worth of $50 or $111 bonus with no deposit. So 5 of you will get the chance to win $111 worth of accounts, and the remaining 10 will get $50 no deposit bonus. You will just receive your accounts and you can start trading right away. This is something that we do from our end to encourage you to start trading, because not only we tell you come and trade, but we, as much as we can, we support you through the learning process until you get your account funded also from our end. So please sit tight. By the end of the session, we'll be having this spin and win. So you will get the information you need. You will learn a lot about the cryptocurrencies, of course, from our colleague Shamendra. And by the end, you will also get the chance to win some free money that you can trade with. And of course, you can withdraw your profits in case you have any profits. Of course, this is what we all hope. So I'll leave the mic now to my colleague Shamendra, and he will be taking you through a quick journey, however, a very interesting one about the cryptocurrencies. Shamendra, my friend, you have the mic. Go ahead.
Yeah, thank you, Yakout. Thank you very much for introducing me. Yes, I'm working with Yakout, and one of the best analyzer we have, and always supporting with the market analyzing and all. Yeah, let me introduce myself. I'm actually into cryptocurrencies before I joined ONEPRO Global, but I believe now I'm more into Forex. So today we are going to talk about the cryptocurrency, but very basics, because we have to start from the scratch. Otherwise, you will not understand. So most of the people who are getting caught with the scammers and all, this is for you actually. So I will not waste my time. We'll start. Is it okay, Yakout?
Yes, sure. You can go ahead. Yeah.
Beginner's guide for trading cryptocurrencies. Guys, when it comes to cryptocurrencies, there are so many scammers, and also that's why we decided to give you this presentation from the beginning. All right, some of you might know about the cryptocurrency very well, but we had to start from somewhere, so it's going to be the zero. That's the best place to start always. All right, so what is cryptocurrencies? The cryptocurrency is decentralized digital money that's based on blockchain technology. And some of you may heard about blockchain, but some of you, I think, not. You may be familiar with the most popular versions, Bitcoin and Ether. Ether is the coin actually, or Ethereum. Ethereum is the blockchain, right? But there are more than 9,000 different cryptocurrencies and tokens in circulation. So we have so many cryptocurrencies. We have to understand what are the cryptocurrencies, what are the tokens we have, what are the cryptocurrency we have around the globe. Now, moving forward, I think you heard about the blockchain, right? You heard what I was saying when I was mentioning about the blockchain. Now, what is blockchain? The blockchain is a peer-to-peer network where peers can communicate and transact with each other without the need for a centralized entity. So technically, we don't need people in between when you're doing the transaction. Now, benefits of blockchains: enhanced security and better transparency, true traceability, reduce cost, improve speed and efficiencies. Okay, this is what we can get from the blockchain. So before we go, before we move forward, the blockchain was conceptualized by few people, but not before. It's not in 2008. In 1991, the Stuart Herbert and the W. Scott Stronetta envisioned something similar to blockchain. So it happened in 1991. Then in 1998, W. Dye, a well-known computer engineer, mentioned the idea of decentralized money, which is called B-money. Okay, and then in 2008, Satoshi Nakamoto released the Bitcoin white paper, which uses blockchain to power the network. Now, most of the people, including my country, I'm from Sri Lanka, so everybody thinks that the cryptocurrency is the best. No, actually, the blockchain is the backbone of the cryptocurrencies. Without the blockchain, there's no cryptocurrencies. So that's why we have to understand very well about the blockchain, the connection between the blockchain and the cryptocurrencies, as well as within the cryptocurrencies, we have to understand there are a few things that you may do not know. So let's move forward. The cryptography. Now, when it comes to cryptocurrencies, some people say it's a scam. Some people say, no, we don't believe in cryptocurrencies. Basically, personally, I believe in cryptocurrencies because I believe in the evolution of money. So I had to admit it. All right. So we had to move forward. So the cryptocurrency was created by the system called the cryptography. It's an encrypted version. Okay, encrypted version. I'll go forward and I'll show you a few examples for that. So cryptography is the study or technique of securing information and communications by turning plain text into ciphertext. Okay, which means hidden writing. So whatever you see on top of the paper, okay, you will understand nothing. But behind that letters, there are messages involved within the particular text called ciphertext. It uses mathematical systems and algorithms, often with special keys to encrypt and decrypt data. All right, encryption and decryption. Maybe you may heard about it. Encryption and decryption. Cryptography aims to allow only the sender and the intended recipient of a message to view its contents and to keep vital information safe and confidential. Okay, so basically, if you are using the cryptocurrencies, okay, your personality will be completely classified, but the transparency will be 100%, and also traceability. Cryptography is used for digital signatures. So cryptography we are using for the digital signatures as well. Timestamping, electronic money transactions, and as well as the cryptocurrency and more. So the blockchains will be the next revolution, and it is the revolution actually. So we are moving forward. Most of the companies such as Microsoft, starting from Microsoft, DHL, even the Dubai government, they're using the blockchain technology to secure their transactions, as well as for the separate sections, what are you calling, immigration, Dubai immigration, they're using the SALIC, they're using the blockchain technology, and Dubai police, they're using the blockchain technology. Even the Emirates ID, what we are using, it's under the blockchain technology. That's why everything's in one card. Okay, let's move forward. So we have two type of ciphertext when it comes to the cryptography. This is cryptography. So this is where the cryptocurrency and the blockchain connect. So the ciphertext means, if you see the ciphertext alphabet for the first letter, so you can see A equal to B. So B equal to B, C equal to G. Okay, it goes on. And in ciphertext alphabet B, second letter, you can see A equal to V. So basically, if somebody want to say, I am, all right, I am. So let's go to I. So I mean, it's D and U. Okay, D and U is the I. All right. I am mean A mean B and V. That's called A. M mean, where's the M? Okay, S and again S. It's the same thing. So this is how the people communicated through the different machines called Enigma during the Second World War. The German, they created this machine, and then as well as the Japanese. So this is the technique that we are using to do the transaction between peer-to-peer in the blockchain. All right. Now, I think it's quite interesting, isn't it? Right. Now, let's go back to the cryptocurrencies, because I just want to give you a small brief about the blockchain, because without the blockchain, most of the people, they get confused with the cryptocurrencies. They think sometimes through the website that they can do the transactions. This is where the scammers comes. They are pretending to be as a blockchain technology providers, but it's just a $5 web domain and the websites. All right. So the evolution of money. So we know we had a barter system where we exchanged the goods during the early ages. Then people moved from there to the gold. From the gold, they moved to the metal coins. But again, they had a problem with the golds, because when they want to transfer the gold, there are costs involved, and then also the security concerns comes in between. And then they moved to the metal coins, again counting and time wasting a lot, and then they move to the paper money. So this is where most of the Asian countries stopped, actually, in between the plastic cards and the paper money, including Sri Lanka, and then also the India, Pakistan, so Bangladesh. They're actually bit stuck over there in paper money and plastic cards. Electronic money we do, but some of the countries, they are not allowing the electronic money, including Sri Lanka. They don't allow PayPal in Sri Lanka. All right, so then they move to the plastic cards. From the plastic card, they move to the electronic money. So electronic money, most of the people think that this electronic money means it's a crypto. No. So when it comes to the digital currencies, so it's not crypto. All right. So digital currency is not crypto. Digital currency is digital currency. Apple Pay, NetTeller, and then PayPal. This all comes to the digital currency section. Now, what we have over there, the cryptocurrencies. Cryptocurrency is totally different than the digital currencies, because in between the transaction of the digital currencies or the electronic money, there are middle person. When it comes to the Visa cards, PayPal, so we have the third person who's doing the transaction in between. But in the cryptocurrency, we don't have anybody. We have only the miners and validators. All right. Let's move forward. Now, when it comes to the blockchain, so we have to understand how the transactions happen. But now, the blockchain, we have four types of blockchain called public blockchain, which I'm going to talk about it right now slightly. And then also we have the private blockchain and the consortium blockchain. And then also we call another blockchain called hybrid blockchain, which is combined together with public and the private. I'm not going to talk about that part because it's something technical. And then also we don't need that much of information today, but I'm sure Yakout will organize another webinar to discuss about the blockchain and the cryptocurrencies more and more. Even the Binance, it's in hybrid blockchain. So private and the public blockchain combined together. This is where the Binance was born. And the public blockchain, this is how the transaction happens. Okay. So the transaction, they're sending money from there. Okay. So we have the crypto hashing, all right, which is the, let's say, ciphertext. Okay. This is everything's happening in a digital market. So this is where the validators are validating the transactions. So basically, in between the buyer and the seller, in between these two people, they have no clue about the details that what they're sending through the cryptography. So technically, what they're doing in between, they are resolving a puzzle. So they are resolving a puzzle. Okay. So let's say somebody saying it's 2 by 2 is 4, and they're sending. Somehow the other computers realize that it's 2 by 2 is 4. Then they are sending 2 by 2 plus 1 is 5. They're sending. But they have no clue what is inside, the hidden information. Okay, the hidden information between the seller and the buyer is the private key. Private key is like your bank account with the OTP. So you should not give to anybody. All right. So once the transaction validated by the miners and the seller get the exact amount to their wallet, digital wallet. So this is how the transaction happening, but there's a mechanism involved in this particular part, but I'm not going to talk about this today. Let's move forward. What is peer-to-peer system? Person to person, we said P2P. In Binance, sometimes people get confused with the Binance P2P. It's not what we're talking about here. The Binance P2P is like type of transactions, exchange system that people can do the transaction, buy and sell the cryptos using the Binance as the third party. All right. So the Binance, they are the one who's validating the transaction in between the seller and the buyer. But what we are talking about over here, it's not about the Binance P2P. All right. So don't get confused. So the P2P means when somebody is sending money from Dubai to America, okay, there are people who are doing the validations. Now, when it comes to the Bitcoin, we have a one consensus of mechanism. And when it comes to the Ethereum, we have another system. So somehow, either way, when we are sending the money, we don't have the middle person. We don't have the middle person to validate the transaction. Instead of that, we have the validators and the people called miners. So maybe you heard about the Bitcoin mining. So this is where the Bitcoin miners are going to work. In between the people, what they're doing, they're just validating. Technically, they're resolving a puzzle. That's it. So it goes to one computer. It has an encrypted version, and then encrypted version is gonna stored in that computer, and then from there they're going to generate another code which is going to be in other computer. So it goes one machines to another machines all around the world, and then finally it goes to the last person of the transaction. All right, the person who's sending the public key. Guys, I know it's kind of slightly rocket science because today we are talking about the cryptocurrencies, but Yakout, please arrange another session for the blockchain technology so we can talk more.
Yes,
all right.
Sure.
Yeah. So the transactions happen in between the people. So in between the people, we have the validators. All right. We call miners and the validators. So, but the good thing is, now if you're sending money from the using the credit card or the debit card by Visa, so many people will see your transaction, especially the Visa card company, and then also the bank. Everybody will see your transaction. But over here, when you're sending the transaction, they will not see anything. The miners, they will see only the codes, okay, encrypted codes. Only the information who can access is you and the person who sent you the public key to get the money. This is the only two people who can see. But the good thing in cryptocurrencies, we can trace. This is the best thing in cryptocurrency. It's better than the centralized currencies. So we can trace each and every transaction using the blockchain. All right. Now, other question. Most of the people, they're asking me, okay. Now, when it comes to the centralized currencies, which is fiat currencies, we have the wallets and we have the bank where we can store our money. It's protected. So in the cryptocurrencies, where we can keep. All right. So we have types of crypto wallets called hot wallets. I'm not going to describe each and everything, but this is going to be the first thing. So hot wallets and the desktop wallets, where you can download your wallet as an extension, and web wallets and mobile wallets, cold wallets, paper wallets, and hardware wallets. And I recommend, if you have a big thick wallet, if you have a lot of money in cryptos, I recommend you to buy a hardware wallet. Maybe the Ledger is the best one. But again, when you are going to buy hardware wallets, don't buy from the eBay. All right, please buy it from the company, because most of the people what they're doing, they're buying the hardware wallet from the company, and then they are taking the secret numbers and they're selling that wallet into the wallet through the eBay. So people, they're purchasing from the eBay and they put their money inside the wallet, and that people, they are stealing the money. This is one way the scammers, they work. All right. So there are so many ways that scammers are using these cryptocurrencies, unfortunately, because we are in the 10 years gone, but we are still in the early stage of cryptos. Because that's why when the Bitcoin goes up, the entire the crypto community going up. All right. So the day when the Bitcoin goes up, when the crypto Ethereum goes down, then that day I can say now the crypto is good, and then the community is very big. Up to now, crypto is, I mean, compared to the Forex, crypto is a very small market around the globe. I told you there are two ways that the crypto works. All right. Now, proof of work was proof of stake. Now, this is kind of technical part, but you should understand if you're really going to buy cryptos and all. This is the basics that you should understand, and then you should be aware of. Now, proof of work. What is proof of work? Now, when it comes to the Bitcoin and the Dogecoin, so they're using this old system. I must say, to me, it's an old system. All right, the system that required a lot of power, a lot of energies to validate the transactions. Now, crypto mining is what when in the proof of work, they're using the technique called the crypto mining. So you know about the crypto mining, but it's called proof of work. Now, for this proof of work and the proof of stake, we call it consensus mechanism. This is where the security is. This is where the security is within the cryptocurrency. So proof of work, mining capacity depends on computational power. So which means if you want to get more money, if you want to get rewards validating the transactions, you have to keep your computers on. And for that, there are 1,000 watts are wasting because of the transactions. All right. Now, in proof of stake, we call it POS. Validating capacity depends on the stake in the network. What is stake in the network? If you have money, if you go to crypto.com, so you can find the staking. If you go to Binance, you can find Binance staking. So what basically you're doing, you're just buying the cryptos. Probably the Ethereum. Let's say Ethereum is the number one blockchain. So let's say you're buying Ether, and then you can stake instead of trading or anything. You can stake and earn money. So when you're trading Ethereum, when you're trading Ether, so whenever you want to store your money, instead of just keeping over there, you can participate with the network. So the network will grow, and then also when the price goes up, you will get the rewards with each and every transactions. And plus, if the price goes up, then you will be double profitable, right? And in proof of work, miners receive blocks of rewards to solve a cryptographic puzzle. Miners receive block rewards to solve a cryptographic puzzle. So basically, what they're doing, they're just validating the transactions, okay, encryptions and decryptions. Now, in proof of stake, validators do not receive a block reward. Instead, they collect transaction fee as rewards. So if you have a wallet, you can do the staking, all right? And the third one, hackers would need to have a computer powerful than 51 of the network to add the malicious block, leading to 51 attack. It happened actually 2 years ago. Once I tried to send $20 worth of Ethereum to one blockchain, and they asked me to pay $280. So this happened actually. So that's why the Ethereum decided to move from the proof of work mechanism to proof of stake mechanism. And the first coin which is moved from the POS, it is called Cardano, or we call ADA, all right, ADA, right? Now, what is this 51 attack? Let's say now the Bitcoin's validators, they're using the electric power. Let's say I have a 10% power from the globe. The other person is having 20. The other person having 20. So already 50. So if we talk to each other, if we decided to come as a centralized team, so then we can control the Bitcoin. Right, so that's why there are so many. I mean, the Bitcoin developers are doing something called Lightning Bitcoin. So they're trying to reduce this 51% attack. So, but the meantime, in proof of stake, hackers would need to own 51 of all the cryptocurrencies on the network. Imagine if somebody wants to hack Tron, so they had to buy 51% shares, which is not possible. All right. So because of that reason, so the POS system is the best system right now to do the transaction. I'm not saying Bitcoin is bad. Okay. So Bitcoin will come up with a solution in the nearest future, because I was having a meeting with one of the Swiss banker. So he told me that they're coming up with something called Lightning Bitcoin, which is already there. And once the Web3 is launched, so there'll be a big market for the Bitcoin as well. So, which is practically impossible, and therefore making 51 attacks impossible. So most of the coin right now, the Bitcoin is there, but most of the coin, they can do the same job better than the Bitcoin. So it's always depend on the people, supply and demand. To me, the Bitcoin will go up for sure, because one Satoshi is somewhere close to now 0.002, something like that. But if I'm not mistaken, in one Bitcoin we have 100,000 Satoshis. So which means we have 8 billion people around the world. If I try to give one Satoshi to each, still we can cover up only 2.1 billion people. That's it. So Bitcoin is having a future. But we never know when it comes to digitalization. We never know what will happen. But this is our predictions only. All right. Now, don't buy Bitcoin tomorrow, please, guys. Come to ONEPRO and trade. All right. Now, the transaction happened like this way. Okay. Unfortunately, I'm not going to do the presentation, but you can see over here, when the transaction comes from that key to the B, all right, Bitcoin over there. So the transaction goes to each and every miners and then log the transaction over there with their hashing keys. So nobody cannot do the transaction. Nobody cannot do the duplications because each and every blocks are connected with the hashing power. So what will happen if somebody try to change the code? Automatically what will happen? The transaction will get failed. All right. So that's why people are using this technology, especially Saudi Arabia. They're using Ripple for the insurance and for the banking sectors, and also Dubai. They're using the blockchain for the almost for everything, and Australia, and then as well as Qatar, they all are using the blockchain technology, because this is not only to transport the money, transfer the money. Okay, the blockchain is something else. Okay, so we can use it in hospital industry, tourism, and also financial market, and then as well as the property market we can use. So when it comes to NFTs and all, the blockchain will be the next giant within the market. And then also the job market is very big in blockchain technology. If you are a developer, if you know about the Solidity language, how to write and all, so the market is very big, right? Right. Now the second thing. Now I showed you how the proof of work works. All right, in a very basic way, right? But here I will show you how the POS system works. Let's say you have a 1, 2, 3 cups. All right. Now in this cup we have 1 Ethereum each. Okay. Now if somebody is sending 1 Ethereum to this cup, okay, there's no enough rooms to have 2 Ethereum. So 1 Ethereum will come here, and the second Ethereum will goes to the second one, and then it goes to the third one, and then it goes to the fourth one. So technically, if you have more coins with you, let's say you have 10,000 Ethereum as a stake. Okay, so what will happen? You can do up to 10,000 coins transactions. All right, and you get rewards for that. So more you stake, more you get money. And over here, you don't have to worry about the scammers, because nobody will put their money at risk. All right, nobody will put their money at risk. Nobody will play with their own money while they are staking their coins through the companies. There are so many companies, so you can check what is the best company. So I actually recommend crypto.com, one of the best. And over here, what will happen? If they're trying to, let's say somebody's taking 0.05 Ethereum and the other person also doing the same, and everybody's taking 0.05 Ethereum. So now somebody's trying to send 1 Ethereum through this network. It will not go. It will not go. What will happen? Why? Because there's no room. Okay, the room supposed to be, I mean, we are sending 1 Ethereum, it has to go 1 Ethereum, not half. Okay, 1 Ethereum has to go. So Ethereum, the transaction will get rejected, but the blockchain will find out the exact place where we can do the transaction, and it will go automatically to that area. So if somebody is having a big stake, so always the transaction will happen from that particular holders. All right. If you have a small amount, I recommend you to go for the DPoS, Delegated Proof of Stake, which I'm not going to talk today, but you can see what is DPoS in the website and then get better idea. Now, this is the tricky part. Okay, this is the tricky part in coins. Today also I heard somebody was saying, I put a trade, now my market is the price is going down and I don't know what to do. I'm running on a minus now, please help me. He just sent me a WhatsApp message. Then I asked, what are the coins that you're trading? I have so-and-so coin. I said, it's not a coin, it's a token. And he asked, what is token? So guys, so when it comes to the cryptocurrencies, we have coins and the tokens. Okay, you can create a token within a second. I'm saying like this. It will take to create, I mean, just to copy the coding system, and then you place it in the SATA network, and then you can execute it, and then you can have your tokens, but there's no value, right? So you have to understand this part, especially if you're trading in cryptos. So the coins, a coin is a digital currency similar to physical currency, because we believe in Bitcoin, we believe in Ethereum, we believe in Tron, we believe in XRP, because the companies are huge, and most of the governments they're accepting such companies, okay, including Microsoft. And the token, a token is a digital asset issued on a particular project. So it can be in Sri Lanka, we have one agriculture project. So they are saying, just buy this token and keep it with you, and the price will go up, when the market is good. So we call it IPO, like initial initial coin offering. All right. So what they're doing, actually, they're just selling the tokens. There's no value in that token, and they're getting your valuable money, which is maybe Bitcoin, Ethereum, or so and so. Maybe we call altcoins. So they're getting your real cryptos to their hand, and they're giving you the not the fake one, but there's no value. So you have a chances to win. If the company is good, yes, definitely you will get rewards. There are so many tokens that if I'm not mistaken, there's a coin went from token went from 0.03 to $46,000. I don't remember the name, but it's just something called DeFi or something, and it went up to that level. All right. And then also, the Dogecoin, because of the Elon Musk, the price went up, and it's all manipulations. There's nothing. There's no value behind it. And Shiba Inu, the same thing, right? People purchased so many Shiba Inus. I remember last year, and then as well as there's another token called Safe Moon. So now, there's no Safe and there's no Moon, and we cannot find that anywhere. And the coins can operate on their own blockchain. So we have the TRC20, ERC20, Omniac, and so and so blockchains. But in token don't necessarily operate on their own blockchain. So technically, you just need to go to the Tron scan or BSC scan or maybe Ether scan. You just need to go there and then put your coin over there and create. You can create your smart contract, and then you can launch your token, right? Now, example Bitcoin and Ethereum, and then example utility and DAO tokens. All right. I'll tell you, even the USDT is not a coin. USDT is a token. All right. Keep that in your mind. Now, when it comes to the USDT, so the USDT is a Hong Kong-based company, so backed by the US dollar, and yes, they are trying to keep their value in equal to US dollar. Okay, that's why they're doing well, but keep that in your mind. It's a token. It's not a coin. Right. Now, the question is, people like you and me, before 2010, we had no clue about the cryptocurrencies. Somehow we managed to learn about the cryptocurrencies. Now over here, I'm sure there are people over here in the chat, in the webinar. I'm sure there are people, so many people who doesn't know about the cryptocurrencies or the difference in between the token and the coin. So somebody can come with a good suit and say, this is the coin, it's going to touch the Bitcoin, and this will be the next Bitcoin in the world. So please buy. Now, right now, it's only $1. So you might buy maybe 10 coins, maybe 100 coins, but it can be a scam. So how to find out the token, or the difference in between coins and the token. So you just need to go, this is only one website I'm just showing you. It's called coinmarketcap.com. So over here, you just need to put your token name or the coin name, okay? And it will appear over here, all right? You can see over here, right? You can see that, or right below, you can see it's a token, all right? It's a token, and you can see where it's located and so many things, and the smart contract and everything, where it's located in Ethereum blockchain. So you can find out how many holders, how many stakers are there, who's holding most of the tokens. Everything you can find out through this blockchain, not the blockchain, through the website. Okay, but from the website you have to go to the blockchain. As you can see here, where is that? Over here, contract. Okay, just down below you can see here the contract, Ethereum OXDAC1. So this is the contract. You just click on it, it will redirect you directly to the Ethereum blockchain. Now, if you put Bitcoin over here, you can see it's a coin, right? So you can, now if somebody comes and say this is a coin, now you know what to do. You just go to the website and search and find out. You can even find the holders. How many holders are there? Last time one guy told me this coin is very good, and I checked, only 5 holders. Only 5 holders. And I had that meeting over here, sitting on this chair. Then I asked him, so where's the token? It's in the blockchain. Which blockchain? Ethereum. I went there, I said only 5 holders. No. We are going to do. I was like, okay, thank you very much. Good luck. Bye. Okay, so we should not waste our time with such a people, such a bad people, scammers. Now the pros and cons in between the cryptocurrencies. All right. The first one, the good and bad in cryptocurrencies. Privacy. I like this part. Your identity is completely covered. Example, in Web3, if you know about the Face ID, where the Binance, they launched the Face ID, you can buy the extension of, you can buy any names under after the BNB extension. Example, Shamendra.bnb. So I purchased many names actually, even Yohani from Sri Lanka. I purchased all the names, but nobody can see my identity. Now I'm visible. Now people know that Johan is with me. Okay, but technically, if you go and search in Face ID, you will find Johannes .bnbs being taken by XYWWXTTTT somebody. That's me actually. So, but you don't know who I am. You just need to click, and if you want to buy that Johannes name, you just need to pay me, and you can give me offer. I may reject or I may accept. All right. And the same time, the transaction privacy plus the traceability. Okay. It's 100% in cryptocurrencies. Okay. You can see if the transactions happen, we can see where it goes, and here and there, we can see what happened to that money. All right. And the decentralization. Now, when it comes to the decentralization, everybody say, nobody's controlling cryptocurrency, nobody's there, and it's our cryptocurrency run by their own. No, it's wrong. Okay, in decentralization, I'll tell you a small example. Let's say you have $100 over here, and then you are trading in ONEPRO Global, and then you just need to put this $100. It's a not fiat money. How you can put it? You can't throw it. You can't throw this money to the computer, right? You just need to go and find an exchange to deposit this money into the bank account of ONEPRO Global, or you have to send via different type of transaction. payment gateways. Now, let's say you have a USDT $100 in your phone, and you have the phone computer over here. You just go to the deposit and find USDT, and click and click. Within 2 minutes, it will come to you to ONEPRO global account. So this is called the decentralization. Okay. Otherwise, the entire blockchain, everything is centralized. Tron is centralized. Tron can send only to ERC20. ERC20 can send only ERC20. So within the exchange, they are comes together, but it's not centralized, decentralized. It centralized. Right. So don't get confused. Networks are secured. As I told you, the blockchain is secured. Plenty of currencies to choose from. Be careful. Huh? Yes, it's a good thing, but plenty of currencies, but everything's moving with the Bitcoin. Okay, so because of that reason, be careful. Be careful when it comes to the cryptocurrencies. I recommend you to go with only 5 coins. I mean, just go and try what are the alter coins. So it works exactly like Bitcoin, maybe in POS systems or maybe in POW system. But make sure that that you are secured. All right. DeFi continues to grow. Yes, what is DeFi? It's decentralized finance. Okay, yes, it is growing. It's growing. We can see the Dep applications are there, and then you have a lot of wallets now. You can do. I mean, you can do the browsing, and then Web3 is coming. The Web3, once the Web3 comes, the Dep system will be. It will be the next boom in the market. And top of that, you know that most of the CEOs now in Hong Kong-based gaming company, they elected one of the CEO. I mean, their CEO. One bot as a CEO in their company. Okay, one AI system, right? So it's growing, and it's good to have the cryptos with you because we are changing. We are going to the digitalization. So over there, we have this DeFi systems always comes in, and then Swiss banks, they're already discussing about the DeFi systems and all what to do in the future. Okay, cheaper international transaction. Yes, it's cheaper international transaction. Yes. Transaction will take only less than 5 minutes, and then you can get a very good rate, better than the other transaction methods. Now, the bad things in this constant price fluctuations and crashes. Yes, you know what happened to Bitcoin. It went to 69,000 and it went back to 17,000. Again, it touched 20,000, and then you have no clue. Some of the people are saying, Bitcoin goes up, Bitcoins go down, but the fluctuation is very high. So especially if you're trading with Bitcoin in futures market in Binance, there's a huge risk involved over there. And the scams. There are so many scammers. I'm not going to talk about the scammers over here right now, but there are so many scammers, especially in telegrams. Hey, put $100, I'll give you $5,000 tomorrow. I told one guy, can you put $100 behalf of me, and then give me, I will give you 2,500. He said, no, this is my business. I said, so yes, please put $100. Then I'll give you, once the money comes, I'll give 2,500 to you. Okay, there are so many scammers in crypto because the legal framework is not yet ready in the crypto. Okay, little no to regulations. All right, little no to regulation. So we don't have much regulations when it comes to the crypto, but Dubai is doing very well actually with the crypto. They are giving the trade license, and then even if you are going to purchase crypto through the Binance or the what is that company called Yakout? BitOasis. So when you're buying, if you buy the crypto using the credit card, this card will recognize it as a cash transaction, not a product. Okay, cash transaction. So the system is already in place in Dubai for the cryptos, and they are ready for that. All right. Even the Emirates NBD, they announced about paying the salaries via cryptocurrencies into 2020, but it didn't happen because of the COVID and all. But I still have the advertisement uploaded by the Emirates NBD official channel from the YouTube. Scaling limitations. Now, this is the bad part of the cryptos. Now, we have the Bitcoin transaction, and then we have the POS systems. But guys, right now, we don't have much people in this market. But if the market grows, okay, based on the supply and demand, when they are when they start doing the transactions in between the blockchain, what will happen? The blockchain will get jammed. Okay, it's very dangerous. All right. So we have that issue in the cryptos, and energy consumption is very high. And I don't know about the Bitcoin, because Bitcoin must come up with a solution. I think the Lightning Bitcoin is the best solution for that, because it will be with a smart contract. So the transaction will not go to the public blockchain often. So I think this is the option for the Bitcoin. Otherwise, it's going to be like an old car. All right, Bitcoin is going to be like an old car. We will not use the old car. We'll use different cars. Like it's moving. The world is changing, and then we have to say thank you very much, Bitcoin. Good luck. We don't know. This is my idea only. Okay, there's nothing. I'm not saying Bitcoin is going to go down or going up. This is just an idea that I have it in my mind. All right. So Yakout, I think we are done. But the good news is now. Mm-hmm. Most of the people, you don't have much money to buy Bitcoins, all right? But in OnePro Global, in our platform, we have the cryptocurrencies where you can do the trading. So you don't need to have the cryptocurrency, you just need to have the dollars, and then the company is providing the leverage, and using the leverage with the proper technical analyzing, so you can earn the dollars, okay, by looking at the Bitcoin price fluctuation. So this is what you can do. Not only the Bitcoin, we have the Litecoin, and then also NEOS, and also we have XRP, and then also we have TRX. So you can start your journey with the OnePro Global. And I started my journey with OnePro Global after so many years. I joined the company, and then I must say one of the best company, because I deal with few companies before. And I'm actually enjoying. This is like my home. You know how we are working, Yakout. Yeah, over here. There's no rules or anything, but we are following the rules. Okay, okay, Yakout. Guys, thank you very much. I think I hope you got a vast knowledge about the crypto. It's. I mean, we are running out of time. Like I just need to explain everything one by one. But we're going to continue very soon. Another webinar regarding the blockchain and the cryptocurrency, maybe the next stage of the cryptocurrencies. Yakout, all yours.
Thank you so much, my friend Shamendra, for the information and the knowledge that you have shared with us. I personally learned a lot from you, one of the experts in the cryptocurrency industry. So today and right now, basically, we'll just have a quick look on the technical analysis side. I know we are running a little bit out of time. However, the technical analysis time will be around 10 minutes. We will go through the questions really quick because, yeah, I can see you have a couple of questions for you, Shamendra, regarding the content that you have explained. We have a question from Tommy Adams, and he's saying, is the hard wallet safe to store the...
Yes, the hard wallet is safe. As I mentioned earlier, don't buy the wallet from the eBay. So this is where the scammers are selling the wallets, hard wallets. You just need to go to the company and purchase from the company. You have to make sure that you're getting the hard wallet from the company only. Ledger is one of the best. So you can follow the Ledger, LEDGER, I believe. That's So don't go and buy from somebody else the wallet. You just need to purchase from the company. Then it is safe.
Okay, another question from Kashi Daniel Zakaria. He's saying, which is the best wallet to store cryptocurrencies? And he didn't mention, does he mean a hard wallet or a soft wallet? So what do you think?
I recommend the mobile wallet, also the hard wallet. It's a hard wallet means the core wallet, which is the Ledger, because it's not connected. Like half of the private key is in out of the network, so nobody cannot hack it. So others they cannot hack, but so far there's nothing. We didn't get anything about hacking the blockchain, but we never know when the computer power comes. Like the technology grows, so we don't know what will happen tomorrow. But as of now, for today, nobody cannot hack the blockchain. But I recommend you to put your money in the hard wallet.
Yeah. Okay, we have another last question from Helma. I think the question is in Sri Lanka language or something. I cannot understand. However, the translation says...
Where it is?
Inside the chat, you will find the question and answers only. Tap at the top of the screen.
Okay, I'm just checking.
Yeah.
What's the name?
Helma, first question up.
Julia Mohanad, Julia Helma. Okay. Can I question using? It's gone. Okay. Can I use a Bahasa from the comment? Okay. Can I question using what is Bahasa?
No, you're on the chat. At the top, you will find the question and answer only tab. Just before.
Okay. Sorry. Okay. Sorry.
Yeah. So the
Okay.
first question from Helma, can you read this out?
Yeah. Ape saja yang. Oh, this is not from Sri Lanka. This is actually, I believe it's Filipino.
Filipino.
Yeah.
Okay.
Ape yang dapat. Oh, maybe Indonesia or something similar.
Okay. Yeah, it's showing on translation. It's from Indonesia.
Yeah,
so
okay.
The question says, what factors can make a coin have a high price?
What?
What factors can make a coin price go higher?
It's always, now in 2020, because of the Elon Musk, it happened, right? Mm-hmm. Now, let's say tomorrow, I'll give you one example. Okay. Now we have a Tron network, okay, where we have the TRX. Mm-hmm. Now, Tinsan, the CEO, he's from China, and he studied in Alibaba University. And we have Alibaba in China. If Alibaba, Jack Ma announced tomorrow saying we are accepting TRX, okay, this is where the price will jump. All right. So you have to understand this part. So always it's better to go with the right information instead of going for the pump and dump. All right. Crypto is not here to do that. Okay. Crypto is here to do to do something better than that. All right. So make sure that whenever you are dealing with the cryptos, try to look at the future. Okay. Try to analyze in fundamental side and then as well as the technical.
And that's a very good answer. I do support what you're saying. Right now, let's have a quick look on the cryptocurrency markets. And as Shamendra mentioned, so far, the crypto markets are all tied up to the Bitcoin. It's like the godfather of the crypto markets. So if you want to have a quick look on how the crypto markets will behave or how it will perform in the next period, the fastest way is to look on the Bitcoin itself. Because if the Bitcoin is going up with, or we are expecting that Bitcoin, let's say, will go up with 10%, you might believe that other currencies will go up. Of course, not by 10%. The percentage will differ. However, if Bitcoin is going up, you are not looking short any cryptocurrencies, and the other way around. If Bitcoin is going down, you are looking to only sell cryptocurrencies. And one of also the advantages of trading crypto, because people who are interested in cryptocurrencies are basically divided into two. One of them, or the first part, is basically people who want the cryptocurrencies to use it for the use that was actually created for. I mean, making payments, transferring money, etc., etc. And we have known a lot of this, or a lot about this from Shamendra. However, 90% of other people who are interested in the crypto, I believe, in my personal opinion, is interested because they want to make money. They want to trade on the crypto markets. When trading the cryptocurrencies, you have more than one option. One of the options is actually not to trade crypto on platforms like Binance or the cryptocurrency platforms. However, you can trade the CFDs, or the contracts for differences, because they have a lot of options. First of all, as my colleague mentioned, you can have the leverage. It means that you can have, or you can start maybe from $100 or $50. Maybe if you're one of our winners today in our spin and win, you might even start today trading the crypto. Not only you will get the leverage, you will also have the opportunity to buy if you are expecting that prices will go higher. And in the worst case scenario, if prices are expected to crash, or if a crash happened in the crypto markets, which something regularly happens from time to time, you can still go short and you can make a lot of profits. So whether the markets are going up, whether the markets are going down, whether you are a believer of the crypto markets in the future or not, you can still make use of the volatility and let me say the price movements, the crazy price movements that takes place in the crypto markets. And if you trade with some reasonable technical analysis, and some sort of money management, you can still make very, very good profits. Having a look on the technical analysis here, and because we are trying to give you some sort of a medium to a long-term view, this is the weekly time frame. Okay, so the chart here in front of me actually starts on 2017. We don't have older price data on TradingView. However, the price starts as back as 2007 and 2008 when Satoshi Nakamoto started his white paper, shared his white paper online, and so on. Prices have been going up here, and if you're someone who trades with Elliott waves, you can know that this was a huge impulsive wave to the upside, and you can see here that we have formed two highs and basically broke below. So somehow the upward trend that was taking place since Bitcoin went into place and Bitcoin started to trade in the markets somehow is reversing at the moment, and we're having some sort of a negative move. I will not talk about advanced technical analysis methods, not Elliott waves, not Jan methods. I don't want to do this. I just use in my analysis personally basic price action. I wanted to focus on a single price here, which is this one. To me, the price 28,800 is the key level on the Bitcoin price during the next period, because see what happened here when Bitcoin was basically going down. We found support. When we broke below, we are again going up for a retest. So prices are currently retesting the major previously support and now should act as resistance. And have a look on Bitcoin price action around those levels for the past 3 weeks. You can see indecision candles. This is what we call as indecision candles, where the open and the close price are nearly the same. This is a doji candle, another doji one, and this week is so far another third doji candle. So this is some indecision taking place here. On the smaller time frame, on the 4-hour, and excuse me, I'll go a little bit technical. The prices are moving up and then went a little bit sideways, and you can see here that momentum is going down. This is what we call as a divergence, and in this case it's a bearish divergence, or price is losing momentum. We are just around the resistance levels that we are testing at the moment. So overall, I'll be looking for short positions on the Bitcoin during the short and the medium term. My entry point will be basically a break below the 26,508. So as soon as we just break below, I believe we will be heading lower to at least the previous low of around 19,500. This is not any advice to buy or sell. I'm just giving you my personal opinion, and I'll personally not buy or sell right now. I'll be waiting for a clear price action to form around those resistance levels that we mentioned here. And as soon as I see some selling pressure here, it should be a very good opportunity to make profits in the markets, and I'll definitely short with all of the other people. Let's have a look on if you have any other questions. And now it's time to have our spin and win. So right now we have some good people here in the room. Let me share my screen. Where is it? I'll quickly take all of your names, people who are with us in the room right now, and we will do a very quick spin and win.
Can I participate? No.
Unfortunately, no. If you can participate, I would have done this myself because, So yeah, let me share this one. Thank you very much, my friend Shamendra, for being with me today. I really enjoyed it.
Thank you very much.
It's
been 14 hours together, maybe.
Thank you very much. And of course, we will be trying to go more in depth about the crypto markets. We have a lot to say about the technicalities behind the mining. How does the proof of work and proof of stake work actually on more details? So just follow us on our Facebook page, ONEPRO, and you'll find us on Facebook, Twitter, Instagram, Telegram, and everywhere. So Thank you very much for watching this, and meet up again next week. Good night.
Goodbye.